Good morning. It's Vijay here. Welcome to yet another episode of Pre-Market Commentary, where we discuss what happened yesterday and what's likely to happen today. Yesterday, it clearly looked like SEBI and the exchanges were all Narayan Murthy's followers, and we were the only exchange in the country, in the world, which operated. Today, the all the exchanges are open, so you'll really get to know how strong or how weak global markets are, including India. But lots of things happened yesterday, which made me feel that we are at a juncture of an imminent short squeeze. Now, let us discuss what a short squeeze actually is. So, if you take by the classic definition, it's a market phenomena in which an unexpected rise in the price of heavily shorted stock prompts large number of short sellers to exit positions by buying the stock, thus driving up the price further. This is as far as the stock is concerned. This can also happen in the index, and more often than not, we see indices being short squeezed. Now, yesterday I had mentioned that there could be an imminent short squeeze based on data and experience. Now, I have been at the wrong end of the short squeeze many a time in the past. So I know what happens when the prices keep coming down significantly over a period of time. The bulls become desolate, they begin to sell off their holdings, while the bears become confident and then overconfident, and then the bulls also will join them by shorting the market. Now, obviously, for every short there is a long, so the smart ones will be really accumulating at that point of time, waiting for the exhaustion from the bearish participants. So only when the exhaustion happens, then the market will take off, whether it is stock or whether it is index. I'll talk about it a little later on where we are exactly. So that is what happened. That's what I think is happening. So what happened yesterday, for instance, the market snapped a two-day losing session. So we opened New Year 2025 in a grand fashion, but a very volatile fashion, because at one point of time, the Nifty was down by 170 points. So totally we had a 270 points, about not 170, more than 100 points. We had a 270 point range yesterday. We finally closed 100 points plus, aided mainly by autos. The Bank Nifty had a range of 850 points. In the first 15-20 minutes, there was total chaos in terms of selling. People were selling at any price. So they had to pay any price when later in the day, the markets went up. So I think yesterday was a day when the short squeeze began, in all probability. Of course, nobody can say that this is the time when the short squeeze has begun, because you see there could be some more bad news and some more fresh selling which may come today because the FIs are open. I'm only looking at probabilities. The probabilities tell me that both technically and fundamentally it looks like, because if you see the worst sector, recent and the most hated sector was autos. Maruti and M&M led it, though Bajaj Auto was struggling. So we have to see how market reacts to Tata Motor results today. So mid-cap advanced for the third session. SJVN got some orders, so that did well. Suzlon also got something positive news, so it went up. Small caps advanced for the third session. Tanla Platform and Blue Star did well. Nifty Auto, as I said, was the really top gainer. Then Nifty Bank hit a 1 month low. In the morning, there was total chaos, as I mentioned. It hit a 1 month low, and IDFC First Bank and AU Bank. AU Bank looks something like a dark horse. We hold AU Bank simply for that reason, because I believe it has been highly oversold when they don't have too much exposure. They only 7% of their book to MFI, and everybody is hammering stocks, bank stocks, which are having an exposure to MFI. It's one of the good banks, well-managed banks, but having a low exposure to MFI, and that is why we have bought. Nifty Energy went up. We had a HDFC Bank and Reliance doing well. FMCG advanced, Balrampur Chini and United Breweries. United Breweries, I think results may be good because this festive season, generally liquor companies do well. Financial Service Index, Muthoot Finance hit an all-time high. SBI Card, surprisingly, it's a dead duck, but it got up and did some jing. And Nifty reality has been declining because I think it has gone up too fast, too far. So what did the FIs and DIs do? They opened their account with 1,800 crores approximately net selling, whereas DIs tried to match them at 1,700 crores. Even though institution selling was net sell figure, the markets went up, which shows smart money seems to be in the game. Commodities did not do much because you see the global markets were closed. So though Brent crossed 75 after a long time, gold went up about 2,600 after a long time. Silver is still struggling below 2950. So that is something which is very disappointing because we hold silver also. And there is an interesting thing here on the Investec company, which is the stockbroking firm, which has done a cement channel check. They have noticed that pan-India prices have increased by 8.5 rupees per bag in month-on-month in December 24. Then even though they've increased the pricing 8.5%, it's still 8% lower in year-on-year. And then they're expecting a price hike of between 10 and 20 for January 25. And dealers are indicating demand trends improved slightly, but still lower than year-on-year, but it is turning around. And dealers are expecting a revival in demand because of the construction activity picking up post Sankranti. Generally, till Sankranti, that is January 15, the demand is a little lower. So yesterday we also had the figures of GST. It is 7.3% increase. Not great because you see one would have expected at least 8-9%, but still not bad. So I think we are okay as far as the GST is concerned. And GST, you see, you can never compare the figures because every GST meeting, invariably some things are changed. So the calculations go haywire. So if you get more than 5%, between 5 and 10%, that should be par for the course. 7 is not great, but 7 is not bad. So here is the graph which I mentioned, where you look at what happened the last 3 times when FII's open interest on the short side exceeded 85%. When it exceeds, that means the longs are close to 15 and below. So if longs go to 10%, that means FI open interest short is 90%, then the market bottoms out. If you look at it 3 times, it's happened in the past. March 2023, when the bulls had thrown in the towel, when there was it looked like there's no future because of the Adani imbroglio of the Hindenburg. If you remember, it happened in January end and it continued, the fear continued till March. March is anyway a bad month, and that is the time when the FIs had increased their shorts close to 90%. And the second time it happened was in October 2023. Again, after September 15, the market had fallen very badly, and I was very confident it will go down further. I forgot to look at it. In the March series, I was long. In September-October series, I was short, and I got a pasting because the market took off, and I did not know why it's taking off. So that happened October end till around January. Then the third time it happened was on the results day, election results day. That was an unexpected thing. So FIs panicked and went short heavily, and then it bounced back. So now where are we? I will just let us see whether I can share that graph. Here we are. Yeah. So this is what happened last time, the 3 times, as I mentioned. This is a weekly chart, and if you look at it, today we are looking at it. RSI also is low, which means the people have just given up. Generally, everything looks very bad, and it's also, we are not the moving averages. If you look at, most people look at the moving averages, especially the 200-day EMA. Everybody looking at 200 EMA. If you look at 200 EMA, if you see on the weekly chart, it is still trading. On the daily chart, it's still trading below that. 200 EMA 23,880 is the the wall, you can say. So most people are looking at that. I think I do not give much credence. For instance, if you look at here in 19 November 2024, it fell below 200 EMA for 4 days and then bounced back. If you look at further, also somewhere in 2023 March, when there was a lot of negativity, it fell below 200 EMA for about 15 days and then bounced back. Of course, in October, it just bounced off the 200 EMA. Same thing in case of June. But so now we have had 2 times when it has come below 200 EMA, and this is the time it has got bounced. It has bounced. So based on data, I suspect that we will bounce about 23,880. The only problem I see is when, whether it'll happen today, next week, or following week, or whether this will all get negated with some new bad news. I believe that we will not get any new bad news. Very unlikely that we'll get any bad news going into budget. But whether the short covering will happen today or later, I don't know, because it can go even to 90%. It's about 86.4% now. It may still go further. What I can only think is that it's unlikely to break the December lows of 23,500 and trade there. It may break. Anything can happen in the market. Yesterday, for instance, the way they hit it, it came down to 23,562. So 23,500 is not something very far away as far as yesterday's lows are concerned. However, I believe even if it breaks 23,500 and tries to go near the previous low, which is 23,263 on 21st November, I don't think it will sustain. So this is what I think. Sorry, I don't know whether you could see it or not. Anyway, this is what has happened in the past, and this is what I think will likely to happen now. And we should, see this. Yeah, this is the chart. If I don't know whether you could see it in the past, but generally, I think we should be okay. So therefore, I don't know whether I showed the moving average. If I've shown the moving average anyway, the moving average also I'm just showing now because I'm just recording live and just putting it. So I don't know whether one could see that. So this is the 200 EMA. It is trading below that. 23,880 is the 200 EMA. So it may break anytime. I feel probability is high. I can't say it will definitely happen, but the probability is high. So whenever the moving average has broken 200 MA and stayed there, it stayed there for only a few days. It happened in March 2023. And as I said, that it has not broken in October 2023. It just bounced off the lows from that level. And it also bounced off from that 200 EMA in June. So net, I feel the market men are extremely bearish. The bulls are scared. I am not scared. I go yesterday also, we went into it long. Today also on all declines, we plan to buy. We are invested mostly in pharma, and I am planning to buy cement stocks. And I will pick and choose. And because I think cement, which is also a hated sector, should do well. But whatever you do, I hope successful. Thank you for